No one is talking about what's happening in the Bitcoin and Ethereum price right now. If we look into this Bitcoin chart on the daily, then you'll see that we've kind of clearly run into a significant area of resistance. But zooming out from here, we can see that we are kind of still sat in a middle ground between an area of resistance up here and an area of support down here. So why are we just stopped here and starting to see a turnaround? Why are we not pushing higher? Why are we not pushing lower? What is really going on in Bitcoin and Ethereum? Let's think about it, guys. Well, I'm going to show you everything. As soon as you hit that like button, then we're going to get into this video. Thanks, guys. Basically, we have seen something very interesting happen on DXY. The US dollar index has been doing the opposite of what Bitcoin has been doing for the last few weeks. We've seen DXY pushing up and then starting to push down. In contrast, the Bitcoin price has been pushing up and is now starting to push down. So we're seeing it do literally the opposite of the DXY. Which is why it doesn't really matter on this particular Bitcoin chart what's really happening in terms of support and resistance, because the information is coming from the DXY. Now we've seen the DXY starting to lose strength as the Fed have hinted that they're going to start to reduce interest rates. Interest rates have been going up for the last year or so, and that's what's been causing the US dollar to ramp up towards the upside and the Bitcoin price, along with every other crypto, to push down towards the downside. So by understanding this, we'll understand where the DXY is heading next, and that's going to give us a very good indication of what's going to happen in the Bitcoin price. Now, if you've been paying attention to the macroeconomic news, then last week you would have realized that the Fed had basically hinted that they were going to start to reduce interest rates, and that meant that DXY continued to fall, and we saw Bitcoin ramping again up towards the upside. But what has just happened here is very interesting. On Friday, the US announced that its unemployment rates were the lowest they've been for about 50 years, which means that the economy is perhaps not as bad as anticipated, and perhaps further tightening and further interest rate hikes are going to be potentially on the table next month. If this therefore happens, then the recovery we've seen in the Bitcoin price recently will be squashed out. But I want to look on the bigger picture of what's going on in the DXY. This is a 6-monthly chart. Each candle represents 6 months worth of action on the US dollar index. And we can see right now that if we draw a box across here, that actually, although we have had a few times where we've breached above it, we actually are in a very significant area for the DXY. And right now you can see this candle here indicates to me that we are about to see a turnaround. If we get more development in this candlestick here, we're going to see an evening star candlestick where we have a push up, a big rejection candle here, and then another engulfing candle. And that would see us potentially drop out of this trend, which has been alive since 2001. So in the last 22 years, the DXY has been pushing up. This basically represented the last crypto bull market that we saw. So just imagine the scale of the next crypto bull market. If we start to pull down here and fall out the bottom of here, it's going to be absolutely enormous. As we jump into a 4-hour chart for the Bitcoin price, you can see something kind of interesting. Now, this is clearly a demand zone for the Bitcoin price. And the reason is, guys, every time we're getting into this area, we're having an aggressive push out of this area. We come back in and you can see these wicks towards this area here showing the Bitcoin price really is struggling to get back down through it. Now that doesn't mean that it can't get down through it, and actually after I saw this down, up and the collection of liquidity here, I was anticipating that we would push further down. But notice something significant. We are still getting pushed higher, and whilst everyone's been drawing a rising wedge and saying that we've already broken out of it, if you were to connect the dots of all the bottom of these wicks, we are still in the hunt. And if we're able to hold this level here, then we are theoretically going to have to start pushing higher once more. And yes, this is a rising broadening wedge, which ultimately probably more bearish than bullish. But it wouldn't surprise me if we are able to have a continuation towards the upside. And this could realistically still be looked at as a bull flag, in which case we would then have an anticipated breakout from here, and that would push us up towards 27.5k. And yes, we are massively overextended. But every day people are flowing back into crypto, new people are flowing into crypto, and it's actually getting quite exciting. Now that's obviously the bullish scenario that we're looking at for Bitcoin there. There's obviously a bearish scenario as well. And it's all really hanging in a balance. Looking into a 4-hour on the DXY, perhaps we're running into a bit of area of resistance here. Now you can see that every time it's pushed up into this zone, it's been aggressively rejected. And if we're able to see an aggressive rejection here, then we're going to go lower, and that's going to see a very bullish day for Bitcoin, because I think it would potentially sell off very hard, especially if we're breaching below these levels down here. And whether or not the DXY is able to break down below this zone will be left to see, because we did sort of get faked out and back towards the upside, but potentially we are going to continue to see further downside action. you can see that we are still technically in a downtrend. This is a lower high here, and unless the high is coming back up here, I still anticipate this is going to push further down, and we could well then be retesting lower areas like this one down here, in which case I think that that will equate to a Bitcoin price in the high 20s to maybe even up towards 30,000. And as we look into an Ethereum versus Bitcoin chart, we can see that we are still again in an accumulation zone. Now I look at the Ethereum versus Bitcoin chart because when the markets are moving up, due to the fact that Ethereum has a smaller market cap size than Bitcoin, Ethereum will move more aggressively. This means that we can get an indication, if this is looking bullish, that both Ethereum and Bitcoin are likely to go up and continue going up more easily sometimes than we can see just by looking at a Bitcoin chart or an Ethereum chart on its own. So as you can see, every time we're arriving in this zone, we get an aggressive push out of it, and we have been over the last couple of days or so. So if we continue to see support and we're pushing up here, then things could be getting exciting. Now, as we do know, however, if the DXY is to breach that area and to start pushing higher, then this is going to come back down lower, in which case our next point of interest is this area here. We know that this is a key area of interest, guys, because last time you can see this huge institutional money driving Bitcoin out of this area, and we know that institutions like to bring the price back to previous areas of accumulation. So we now know that this area would be a great accumulation zone for Bitcoin. So theoretically, we do get a pullback, then I'm looking for a buy from here. Am I taking buys right now? Well, not really. I still want to see a larger green candle coming out of here, showing me that we're getting some excitement and intention coming from the big buyers to push the price higher. If we're able to breach this area up here, we're going to take out a lot of the stop losses on people who've gone short, and that will result in a short squeeze where all of those stop losses on sell trades will get flipped into buys, and then we then get that snowball effect again, pushing us higher. And looking into Ethereum again, fairly inconclusive. A lot of people still sort of traditionally relying on these rising wedge patterns, and they do play out. But where we are right now in the cycle, if you were to look back to the equivalent where we were in the cycle before, then these rising wedges basically were consolidations that basically then just led to further pushes higher. So although statistically it's more likely to break towards the downside, something like 65% of the time it will break towards the downside, I do still feel that we could push higher. I haven't seen a significant wick towards the upside that indicates to me that we're going to see a short-term blow off top. I could obviously be wrong though, so obviously be cautious. I'm not telling you this as financial advice, I'm just telling it to you as I see it. And if you want an opportunity to trade both Ethereum and Bitcoin, then you can do so over on Fairdesk, which is linked down below in the description, where you will get a deposit bonus of real money that you can actually use to make yourself more money. It has amazingly low rates on futures as well as spot, which is why I prefer this platform to others on the market. It also offers copy trading, where you can copy experienced traders to take trades when they take trades just with a few clicks of the button, obviously not without its risk. So obviously don't use any money that you can't afford to lose, because trading crypto is risky for anyone. Guys, if you enjoyed that video, hit the thumbs up button for me down below, get into my Telegram link there as well, and subscribe, and I will see you in the very next video. Bye bye.